Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, the start of another week. Remember, last week on Friday, we did see following the RBI's announcement, the Nifty also witnessed intraday swings in both directions during the mid-session, but eventually it did show us some upside recovery from the lows. We're already seeing some pre-open trade kick in now, 23,600, almost in tandem with what the GIFT Nifty trends were indicating. So 0.1% higher in trade for the Nifty at 23,590 odd levels. But remember, last week we've actually seen volatility in anticipation of what the RBI policy could do. Finally, we had the rate cuts delivered. Metals were the top performers on Friday. Of course, this was also led with some kind of a relief rally playing out in this globally oriented sector. This is after the sentiments improved after US President announced a temporary pause on tariffs on both Mexico and Canada, easing the global trade worries as well. But select financial stocks also like Federal Bank, REC, PFC, they had rebounded from lows as well. Let's look at how the banks are performing in trade today, right after that big policy decision has come in. If there is any kind of a bounce, we're already seeing some volatility in trend, 0.8% higher for Federal Bank. That continues from its bounce from Friday too. But heavyweight banks like HDFC Bank is opening about lower, 1.9% lower. So mixed trend. ICICI Bank is higher by about 0.8% or so. We're also looking at Axis Bank down. So it's a mixed trend. Let's look at the IT pack. 1% higher for SBI, that continues with its positive move after the earnings have come through. Let's look at the IT pack as well now to see how the Nifty IT index is opening. The ticks haven't started for this one yet, but let's look at individual stocks. Infosys, about 1% higher opening is getting indicated in the pre-open trade, 1925. Then you also have, let's look at Wipro and HCL Tech, TCS, all of these counters as well. Slowly and gradually, we will see this move also come through. 1.3% higher for Infi is what we are seeing, 0.7% uptick for TCS at this point in time. Now, of course, what we will also continue to look at is how are some of the other pockets going to be looking at rate sensitives, real estate, auto versus the pharma stocks, where of course some of them have reported their earnings. Many are in news flows as well. So pharma will also be important to track. Let's in fact welcome our guest on board. Dharmesh Kanji is with us. He's the head of equity research at Chola Securities. Dharmesh ji, warm welcome. Good to have you with us. Another week that starts off, of course, the whole idea will be to look at again Q3 earnings that are pouring in. We will also look at this week January inflation data, CPI as well as WPI. Industrial production data will be coming in this week as well. Globally also we will see US PPI inflation data, jobless claims, so a whole host of factors that will again keep markets on tenterhooks. There is again this fear of what is Donald Trump's position as far as tariffs are concerned. There is fear on metals and aluminium that he may increase the tariffs, at least on some countries he is reducing or pausing the tariff announcement on Mexico and Canada. So how should the markets and the retail investors navigate through all this move in this new week, sir?
Yeah, good morning, Sakshi. Good morning to all our viewers. I think this tariff fear will continue, and thankfully India is now at least not there in the bracket. And if you have looked at budget carefully, there was a clear signal by cutting on custom duty that we are not interested in a tariff war.
Yeah.
Our Prime Minister is visiting US this week, and much will be decided after his visit. And I think the message which the world is looking forward to is which side India is going to sit, or how the India is going to be a neutral balancing act as far as economic is concerned between US and China. So all those factors has to be seen. To my mind, I mean, budget and RBI policy did roll out, but we were addressing the present situation rather than attacking the situation and reversing the course of slowdown. So, I mean, in budget, the capex thing was missing totally, where we have seen a clear deceleration in the activity, also visible in the earnings front. And RBI policy, they could have front-loaded it by 50 basis point rate cut. So, whatever was left in budget on the capex front could have been, at least got a jump start through this cut, which did not come through. So, I think, to my mind, that's a bit of a neutral and when it comes kind of a situation rather than changing the course of the action, which market did not like. The earnings has not been great. If you exclude the exceptional items, it's a very poor set of earnings, 4-5% kind of a growth, and 50% is degrowing rather than growing in the earnings trajectory. So these are all challenges. But to my mind, just for this week, I think any declines is likely to be bought into till Mr. Modi's visit to the US is concluded. So go with a positive bias. On political mandate, Delhi has come through. So I mean, you guys have voted BJP in the power. So this is a third state after Haryana surprised and Maharashtra and then Delhi, and now the expectation is even Bihar will come through. So that political instability, the exclamation mark which was there, is now through, and it's more of a stable environment. So things are shaping up well, but that mojo thing is still missing. What will reverse the course of earning trajectory for the markets, and that is where I think it would be a tentative trading bias, but a positive buy on declines kind of a market as of now.
Okay, got that. Well, Dharmesh ji, also wanted to understand from you, how are you looking at some of the earnings which have come through so far? Anything that has stood out for you in the recent earnings that have come in? And overall, on the entire expectation, is it tilting towards the positive side or is it still on the disappointing side, sir?
Sakshi, to my mind, it's a neutral to with a negative earnings bias. Even if you look at SBI numbers, you know what was alarming for me in the SBI numbers, that 15% kind of advances was. I mean, 42 lakh crores is the asset book, and from there they are advancing 15%. But major came from the unsecured lending part of the book. So that growth driver, when retail unsecured, everybody is facing a challenge out there, and my HDFC Bank went out with 3% kind of advances, and these guys are going with 15% with unsecured exposure, getting the maximum of it, is a bit of a worry point out there. Otherwise, I still think if things are going to stabilize from here on, had it been a 50 basis point kind of a rate cut, then financials were in a very sweet spot. One sector is likely to be buy on any declines is the metal space. So I am very bullish on the metal space, seeing the correction basically on the ferrous and non-ferrous both. That sector is likely to do well. BFSI, you have to be selective, but yeah, there are spots of silver linings out there. And defense has corrected quite a bit. And one of the key officials in the ministry was saying that by the end of this fiscal year, at 1,15,000 crore of order books which they have ordered, it will go to 2 lakh crores. So most of the companies would be, you will have a news flow coming in where order book of most of the defense companies would be, again swelling. It's already a very good order book from 3 years kind of a book to bill ratio. It will go to 4 to 5 years. And there I think BEL and HL, the time of stock happening, price correction they have seen, with a very good set of Q3 numbers, and Q4 is likely to be better than that. Stands are merit as far as buying attention is concerned. Reliance Industries from the broader market looks to be a great value buy to me, along with Tata Motors. Auto is a space where one should be focusing on, but one has to be a bottoms up picker right now rather than a top down approach.
Since you're talking about the auto space there, Meshji, M&M is something that I wanted to discuss. A lot of brokerage houses have come out with the reports as well on the Q3 earnings for M&M. So CLSA has an outperform call with a 3,510 kind of a target right there. We have Goldman Sachs that has a buy call with a 3,800 target on Q3 beat. Jefferies has the highest target so far, 4,075, and a buy call on M&M. They're saying that even though on a sequential basis the company has been facing some decline in the ASP for auto and farm segments, but it has still managed to achieve all-time high auto EBIT margin of 9.7%, and there is an expectation that their XUV 3XO Thar Rocks new EVs will actually continue to help the company to gain more market share from here on. There's an indication of just a positive start of 0.3% odd in trade today on M&M. What's exactly the sense that you are having on both the earnings as well as the valuation that the stock has right now?
Sakshi, all the tick boxes are positive for M&M, and even I believe that farm equipment segment is likely to pick up going forward, as Rabi sowing has been very good. At the same time, there has been an interest rate cut, if not 50-25 was being delivered, and there's a tax saving for normal people, so that will also translate into the consumption side. I mean, all the verticals, be it SUV segment, be it electric vehicle segment, farm equipment segment, everything is working out well for them. In this market, valuation-wise, a bit, on the higher side, but that's likely to continue for this, given the outlier space in which M&M is sitting. And Q3 earnings were fantastic. I mean, there was growth on every count, even the margins were quite good for M&M. Going forward, I mean 35, 3600, which all the other brokers houses are projecting, we are also sitting on the same page. And we think 10, 15% in next 3 to 4 months is a likely gettable target for M&M. And this followed with any good news on the monsoon front, then this is going to be a compounder for next 2, 3 years. So for last 10 years, they have been able to get everything right as far as new launches are concerned. This time is no different for them.
All right, okay, got that. We have the market settling in the pre-open trade, slightly lower on the Nifty, 23,543. The sectors that could be in thick zone, like Dharmeshji pointed out, autos seem to be opening higher by 0.2%, PSU banks, infra, IT. Then you also have the mid-caps also inching a tad bit higher, but rest of the pocket still seems to be on the lower end. We also have another guest joining in. We have Vaishali Parekh, Vice President Technical Research and Analysis at Prabhudas Leeladhar, now joining in. Hi Vaishali, very good morning to you. Good to have you with us. Tell us for this new week, what is your expectation? We have two of the mega events last week that have gone by. Now, since most of the risk factors are out of the way, what exactly is the trend that you're expecting on the markets?
Very good morning, all of you. Yes, so I was expecting a euphoric move today post the results, but well, right now I think it's a flat start. So in my opinion, market as far as the major index is concerned should be sideways with a positive bias. So I would say 23,300 is the support. That is what we maintain. And to see Nifty moving past 23,650 levels decisively and sustaining, that would give us a further trigger to 23,800 to 24,200. Bank Nifty slightly more positive. We are looking at a projected target of 51,500.
Okay, got that. So that's the overall market moves that you can expect on the benchmark indices. Vaishali, key stocks or sectors that you're looking at for today?
So actually, metal sector has already shown good strength last week. So we need to see a follow up. So I would say Jindal Steel and Power did pretty well. So I would now look at probably Nalco, Hindalco, JSL. So these stocks should do well. So metal sector, in fact, even auto sector is showing signs of revival. So is the case with Pharma. So let's see, stock specific should be more the theme.
Absolutely. In fact, let me get Dharmeshji's view on the metal space as well. Just like how I was pointing out, Dharmeshji, that Donald Trump is likely to announce new steel and aluminium tariffs today, and which could have importers to pay 25% on top of the existing steel and aluminium tariffs already. What does it mean for Indian exporters, Indian metal companies, and what should investors really understand from here? This was the space that was outperforming on Friday, but again, this tariff news, do you think that can be another dampener? This space has already been very, very volatile.
Yeah. So definitely, I mean, directly, none of the companies gets impacted because India is not exporting to US in a meaningful way. But indirectly, I think Tata Steel and Hindalco will have a problem out there because Hindalco subsidiary Novelis and Analyst both are in US and this import tariff coming into play. And they are more into recycling of aluminum form, I mean, alumina to aluminum kind of a thing for cans and all their subsidiaries in US produce, and their sourcing of that raw material can get expensive. So that is one area where they can come into a play. Even the scrap which Dalco sources will become expensive because of the raw material products are getting on the original count will get expensive. So that one area, and Tata Steel through its exposure of European subsidy will again come into a problem because they primarily supply their output to US. So these two companies can be impacted, but for domestic manufacturing steel companies like Jindal Steel and Power, JSW Steel is unaffected by these measures. So any price hike in the international scene will give them a little bit of elbow room to have our domestic prices also going up, so that will be beneficial for these companies. So again, as we initially discussed, you have to be a stock picker here. Within the same sector, you can have divergent plays playing out for the type of exposure a company is taking. So very careful and cautious here. This year is likely to be for investing into equities.
Okay, got that. So that's the overall view on this entire space. We are going to be continuing to watch as to how they are opening ticks have started to take place. So 23,544 as the opening tick for Nifty today, 11 points lower in trade. Autos in better shape, 0.6% higher. PSU banks 0.1% up. Some gains being also seen on the small caps and consumer durables, but rest of all the pockets are actually slipping away in the red. Metals now down 1.4% in trade. So that's clearly under pressure, giving up most of the gains of Friday. That's the index that's in pain point. Again, the news about tariffs that could be announced by Donald Trump, keeping the entire space shaky. It's the top loser right now, 1.2% lower. Oil and gas also, commodities front, about 0.5% lower. You have Pharma, that's about 0.4% down. Then you also have the financial services, banks, IT, and even the mid and the small caps. Both of them are also down in the red. Only auto and PSU banks now holding up into some kind of gains. PSC index also down 0.5%, although there is some kind of gain being seen on BHEL, on those order flows. BEL also similarly. IRFC, IOC, Container Corp, these look to be in the positive zone. In the F&O space, M&M is leading with 2.4% uptick. BHEL follows. Cummins India, Apollo Tyres, these are the other stocks that are buzzing as far as the F&O trades are concerned. Right now, let's actually look at the broader markets to see where the gains are coming in. Vatek Wabag, that's buzzing. Remember, earnings front, and you have 11% uptick on Vatek Wabag. Then you also have stocks like PNC Infra, 8% higher right at the opening tick. You have MTNL, that's up 7.5% in trade today. Then you also have stocks like Swan Defense, up 5%. Then you also have some interesting names. Ujas Energy, that's another one that's buzzing, about 5% higher. So those are some of the stocks in the broader markets that are garnering some traction. What's not doing well? You have Zaggle Prepaid Ocean Services down 10%. Then you also have stocks like Jyoti Structures, Acme Solar, Alchem Laboratories down in the red, Jyoti CNC, Automation also down in the red. Vaishali, what would you say on the opening today? 70 points down, 80 points down now. We've slipped below 23,500.
Not very satisfying actually, but well, I would look at, as I said, stock specific. Sakshi, because even last week we were looking at some sell strategies, but Nifty somehow is bouncing back. So I would say that for now, if we break 23,300, there could be a further slide, but till then, few stocks like in the cash counter, I'm looking at Castrol. They look quite good, but not in a hurry. I mean, for long-term buy, I would say start accumulating, but trading strategy, it's very hard to tell.
Trading strategy, very hard to tell. Of course, the markets are slipping away. Some more counters that are down. You have even the Pharma counters, Dr. Reddy's and Cipla, also down in the red today. There's some voluntary action on by US FDA that started for Cipla, 1.5% down for this one. Power space, NTPC is down by 1%. Let's look at the advance decline ratio. It's still towards positive. NSE advances is 1079 versus 969 declines on the NSE. Heavyweight banks are down, ICICI Bank, HDFC, but SBI is 0.5% higher in trade. Within the IT pack, First Source Solutions after the results are actually doing well, 4.5% higher in trade. That's doing well. But Zaggle Prepaid down 10%, like I said. This is on the results impact that we are looking at. BEL, order inflow 1.5% higher. Auto space, you have Eicher Motors, that's up by 0.5%. Then let's look at Tata Motors, however, is down. It slipped below the 700 mark again, 1% lower for this one. Then you also have some shipping stocks like Shipping Corporation of India, that's also slipping lower. Ola Electric also now below 70 odd levels, 2.8% lower in trade. There is some target cut by brokerage houses today morning to about 100 odd levels, and therefore you're seeing some declines on that one. ITC Hotels 1% higher, 174 at this point in time. That's as far as some of those mid-cap and small-cap stocks are also concerned. Auto and FMCG now seem to be moving up. India VIX is 6% high at 14.5 odd levels. So keep an eye out in the India VIX also, viewers. That's the kind of move that we are looking at. Dharmesh ji, what's the sense that you're getting on the markets with no confidence coming in on the entire space particularly? What would you say?
A difficult opening, and again, as it will be a volatile session for this week as well. But I don't see us, straight away cut and sliding down below say 23,000 kind of a mark on the Nifty,
Okay.
because many news flows will, giving a flow to the market. Earnings wise, we discussed. I mean, there's nothing great to look into the earnings front. So, if you are a trader, then it's a difficult time. Even if you're an investor, this year it will be difficult, but to pick and to my sense, it's more to do with engineering, research and development kind of companies which are forward-looking. So, though the stock price may be sliding, but on the later half of the year, you can get a better traction like Tata Technology, Tata Elxsi, KPIT Technology and all. This basket and defense basket, keep an eye on that. Any decline there, you have to buy that because the order books are very strong and they have been executing well. So, BLHL, these kind of a company on declines, one should be buying into. Don't expect immediate gain. See, if you, I mean, last 1.5 months, what we have seen the portfolios, it's been, even if it is one step up, then you are 1.5 to 2 step down. So net, your portfolio is not coming into green at all, and this is likely to be a feature for maybe one more month or so.
Okay, got that. Let's look at the rupee. Record low again for the rupee. 87.9 has been crossed now. Dharmesh ji, looking at the continued and persistent weakness in the rupee, would it merit investors to look at IT and pharma?
Again, Sakshi, it's like just a small trade. Even IT and pharma stocks, they have not been a drifting or trending buy. They go up just a bit of correction. Rupee is now with 89, I mean 87.9, is almost 3.5% depreciated from last 3 months, from the last in the Fed cut rate. From there, if you see, and the Mr. Trump assuming, I mean, the election outcome. So 3.5% is a great depreciation in a space of 2.5 to 3 months kind of a trajectory. But still, none of the IT companies are at all-time high or the pharma companies are at all-time high. So it's a trading kind of scenario. You have to take it day by day. But this depreciation, to my mind, is likely nearing its end. I mean, this is the last leg of the depreciation which is happening, and then we will have some, consolidation playing out, and there things should stabilize. But yes, as of now, it's volatile and a jittery situation.
Fair point. Let's get in Vaishali. Vaishali, any stocks that have caught your attention in the F&O space? A lot of them are buzzing. Cummins, PVR, Apollo Tyres, Eicher Motors. What do you like?
So precisely, I was focusing on Cummins and HUL as well. So
Okay.
Cummins, I think technically quite well placed. It's already showing good strength. So with today's low as stop loss, one can consider as a buy for a target of 3,100 to start with. And HUL also technically quite well placed. I mean, I think it's really done with its worst. So process of higher bottom formation, 2350 should be taken as a stop loss. Look for a trading target of 2450 and 2500.
Fair point. Okay, got that. So that's as far as the F&O options are concerned. Dharmesh ji, anything within the FMCG basket, I mean consumption theme, is it still looking attractive or is it far and few between in stocks?
Sakshi, to my mind, is our trade. I mean, HUL, Britannia. Britannia came out with a very good set of numbers, no doubt
Yeah,
about it, with the volume growth playing out.
sure.
So, I mean, wherever premiumization play is happening in the FMCG space, one should be looking forward to that. Because Britannia numbers, is reflective of that. If you are, even raising the prices, and management guided around 5 to 6% kind of a price hike for this year, and they are maintaining the traction. So, Britannia, Nestle, HUL, one can play out. And apart from FMCG, the other consumption space which looks very attractive to me is the hotel space. So, I mean, the average room rate is going up for all the five stars, even in Mumbai itself, and which is not a tourist destination, it's more of a business destination. So, these places, Indian hotels, even East India Hotel for that matter, looks very attractive to me. So, these are the two consumption places one should be looking at, but be stock specific and look for the premium segment rather than the mass consumption.
All right, understood. Let's again look at some of the interesting names here. Vaishali, what looks good? Britannia, we have Dabur, HUL, you did point out. You also have Tata Consumer Products, Godrej, Colgate, ITC also buzzing. The entire space seems to be looking positive on a defensive note. Anything else beyond HUL that you like here?
Well, I guess that's a safe haven right now. So Britannia is another stock to our
Yeah.
liking. ITC is another stock that is also well placed. So yes, and Tata Consumer, we have spoken about it, Sakshi. I mean, we have
Yeah.
been recommending this stock since quite a while. We are looking at a target of 1100. So yes.
Okay. Okay, fair point. So one can definitely look at Britannia, Tata Consumer Products as well beyond the FMCG space. Let's also look at PSU banks that's garnering some strength again. Within this basket also, let's actually look at whether it is only to do with SBI, which is 0.5% higher, only very far and few between stocks beyond it. Bank of India, PNB, Bank of Baroda. So the strength is limited largely to SBI that's pulling up this stock. The private banks also in the red today, largely drawn down by heavyweights like HDFC Bank. But what's up is ICICI, Kotak, Federal Bank. Slight gains can be seen. Dharmesh ji, what about Federal Bank? Anything post earnings that has caught your attention here?
Yeah, to my mind, as far as Federal Bank, earnings were not that great. I mean, earnings was on the negative side as far as Federal Bank is concerned, but I think that the worst is over for them. Next quarter onwards, things should be shaping up well. So that definitely merits an attention on the private sector banking space. You may not be chasing at 190 kind of a level, but if it slides 4-5 rupees because of market correction, it's a good trading bet. For investment perspective, we are bullish on it. So work is going on. More I would be able to comment once that is through.
Sure.
But in the public sector banking space, Bank of India, you just highlighted, that came out with excellent set of numbers. In fact, those numbers were better than that of SBI. Though it's a smaller bank, much smaller compared to SBI. But to our mind, if you're holding it for a year's perspective, 130, 140 should be easily achievable target going by the last 3 quarters, the way the earnings has shaped up. So that's, and valuation wise, very cheap. It's 0.6 times price to book. And whenever this market settles, public sector banks are the first to get re-rated. And there, I think 20% kind of an upside will just be on the count of re-rating, which will happen for all the public sector banking basket.
All right, fair point. Dharmesh ji, you were talking about auto space, so I'll focus on that with both you and Vaishali now. Auto space, but I want to ask you on Ola Electric first. The reaction is down again. It slipped below 70 odd mark again today. Goldman Sachs cut the target to 101. Even though they said that Q3 revenue was above the estimates, the impact of post-festive discounts was definitely there. And the management is now spending time to improve the service network coverage. But the expansion and the scale is something that they want to now look at. Your own sense on what Ola Electric means for investors right now? There are those who are holding on since IPO. They are still in for disappointment because the stock has really not performed post that. Your sense, sir?
Sakshi, brokerages may have their own perspectives and they may paint a picture how the future is likely to look like. But what our sense is, what we are understanding from the market and the participants is a very clear message.
Yeah.
Now all these new age themes, just the prospects won't work. You have to come out with clear-cut profitability, and people are interested in more in operating and profits. So operating profit and the profit both should fall into line. If that is not happening, unless it is being established, you won't have an investment and a 3x, 4x kind of a buy happening. That days are over. And same is the case with Ola Electric. They have to demonstrate it first. Be it Ola Electric, be it Zomato, be it Swiggy, any such thing, Nika for that matter, any concept, new age companies you look at, it's if profitability is not there, you won't get a valuation multiples. You can still get a higher valuation multiple, 100, 120 PE multiples, but profit has to be there. So that's the basic concern. And Ola Electric is going through many changes, many announcements here and there. So let's see, the competition is very hot out there, and it's difficult to see that profit light coming soon.
Fair point. Okay, let's actually, what we'll do right now, Dharmesh ji, is we'll thank you on that note for being with us on the morning edition today. And viewers, we'll take a very quick break. Once we return, we will continue our discussion with Vaishali on the other side on picking up key stocks and sectors that you can continue to focus on today. Stay tuned.
I am proud to highlight Karnataka's crucial role in driving innovation in the aerospace and defense sector. Karnataka contributes to 65% of India's aerospace-related exports and caters to 70% supplier base for India's aerospace and defense industry. Supported by robust infrastructure, skilled talent, and global partnerships, Karnataka is shaping the future of India's aerospace aspirations. Invest Karnataka 2025 will further solidify our state's position as a preferred investor destination for aerospace and defense companies.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra. With us is our special guest, Vaishali, who's going to be helping us understand in this week's setup in the markets, what exactly should your strategy be. Vaishali, 100 points down now, 23,450. How much more downside do you see for the day?
Can be 23,300.
Okay. Vaishali, a lot of pockets have now slipped into the red. I think the market tone has completely shifted into the red as well. Even the PSU banks, FMCG, auto that were holding up onto some gains have given up that gain right within the first 15 minutes of trade. So is there any safe haven, in this kind of a volatile market, or should one be very, very cautious in this setup?
I would say wait a while because, as I said, we still have an open target of 22,500. So maybe, but I would say, as we spoke about this, stocks like Cummins, capital goods and all, they are quite an oversold zone, but that does not mean that could take to further corrective move. But with quality stocks like Trent, Cummins, all these stocks can be considered to start accumulating because the way market is moving, it's really not precise, to go for bottom hunting. But yeah, whenever market shows a bounce back, we can see good returns from these stocks.
Okay, fair point. Vaishali, we were discussing the auto space with Dharmeshji before we went into the break. Tell us, how are you looking at the auto space? What looks good here? Is it the frontline auto space stocks that is looking more promising, or are you looking at the proxy play, which is the auto ancillary stocks?
So I would say, well, we would start with the frontline stocks. So I would focus more on now TVS, Motors, Bajaj Auto, and Maruti. Of course, we have got already seen good returns in Maruti. So I would say let's wait, but auto sector, most of it has shown good. Look at this, actually, we are seeing good erosion coming in. So Nifty quite likely going towards 23,300. So I would say that yes, now that we are getting a clarity on the trend, we may as well wait and buy at lower levels.
Okay, the mid and the small caps are further slipping away. The 1% downtick can be seen on small caps now, and about 0.9% of a decline on the mid caps as well. So they are seeing bigger sell off than the frontline indices at this point in time. Anything that you'd like to suggest on the mid and the small caps front right now, Vaishali? Maybe key sectors or the strategy there?
So, well, actually, insurance, we just saw in the beginning of the day, like HDFC Life was showing strength. So, that is one stock which is also quite good at this level. Then we are looking at Castrol that I mentioned. So, yes, right now these are the stocks. Fertilizer stocks like Chambal and GNFC that were showing good movement last week. So, I would look at these stocks for now.
All right. Okay. Fair point. Let's also take your view on BHEL, Vaishali, within the PSU space. That's got some orders, 1.3% higher today, and as a reaction to those order flows that are coming in for the company. Does it look promising?
So I guess we have a prominent support at around 190 levels, and from there on we are seeing a bounce coming in. So good levels to buy.
Fair
But
point.
I would also focus on the liquor stocks. Look at United Breweries and United Spirits. So these are the stocks which we had in fact recommended our clients last week on Friday.
Okay.
Because that was looking quite good. So yes, these are the stocks that one can consider.
Okay, within consumption, you can actually look at the liquor space that's looking promising at this point in time. Okay, let's look at what else is buzzing. Avenue Supermart is taking higher, 0.4% up. You also have some insurance basket stocks that are buzzing, like ICICI Lombard. That's holding up a bit in this weak setup in the markets. Within the NBFC space, you have L&T Finance. Again, it's going to be widening its horizon when it comes to gold portfolio. You have Muthoot Capital, Fed Bank, Repco Home. These are the Awas financiers. These are some of the stocks that are buzzing there in the NBFC space. Within the ferrous metals, you have some ticks higher, but very, very small names right there. Auto ancillaries, you have some stocks that are buzzing. Sterling Tools, Ask Automotive, Bosch, Nelcast, NDR Auto. These are the stocks that are looking okay at this point in time. We were talking about Avenue Supermarts in the retail space. You also have V-Mart that's picking up. Vaishali, any suggestion that you'd have here? Trent versus D-Mart or V-Mart or V2 Retail. A lot of players here right now. Anything that you like?
So yes, Avenue Supermart is one stock which we are focusing on. So I would say right now also with 3600 as support, one can look for a target of 4100, 4200. And trend I think has seen good corrective move. Let me see the technical levels here. So 5300 is what we were looking at. I would say one should start buying at every dip from here on.
Okay. We were also discussing this new age space, Ola Electric. One more new age tech stock, Delivery, is in focus. That slipped lower today, 4.3% lower in trade right now. And this stock has actually failed to promise in any earnings or the stock performance, even though the others have tried to play catch up, given some kind of bounces to investors. But among the peers who got listed around the same time, this has been rather disappointing stock. 301. Vaishali, your suggestion on Delivery?
So delivery, I think it is showing weakness. I would give it a miss.
Give it a miss at this point in time. Surely looking weak at this point in time right now. What else is looking up? Again, FMCG is looking as the only defensive player that is probably climbing onto some gains. Some of them we've discussed. So Britannia is up 2.2%. Hindustan Unilever is 1% higher. Dabur is up. Vaishali just pointed out the spirit makers, United Breweries, Spirits, both of them are up and about. Tata Consumer Products is also something that Vaishali definitely likes, but this is the only pocket that actually remains up into the green at this point in time. Within the broader markets, let's pull up some stocks. PNC Infra, let's look at this one, 6.5% higher. What would you say on this one? Will it sustain the bounce that it has shown today, Vaishali?
So PNC Infra, well, no harm since it's opened with a gap up. I would say keep today's low, and volume is exceptionally high. So today's
Yeah.
low at stop loss and 340 should be the trading target.
Okay. What else is buzzing within the broader markets? Are very rare names that we can really talk about. Atul Auto is up 7.5%. Vatek Wabag we discussed. Okay, this one is an interesting one. Vaishali, your thoughts on this one? Have you been tracking the water theme and the largest player right now when it comes to water purification, Vatek Wabag? Does it look promising?
I think good level to start buying. Keep
Okay.
1300 levels as a good support because once these stocks get into momentum, I think the stock has really corrected from 1900 levels and to now a low of it made a low of at nearly 1100. So it's making an attempt to bounce. So I would say yes, the stock looks good to start buying from here on.
Okay, went up to 1900 levels, went down to about 1100, slowly and gradually finding its pace, and maybe a good time to look at this one in case you are looking at this water reservation, water purification theme that Vatek Wabag is, a key player in. So keep in mind that stock too. Let's also look at some of the other pockets then. Let's look at the banking names. Vaishali, how are you looking at the entire banking space right now? Where do you find comfort? Is it with the private sector banks or is it with PSU banks like SBI right now?
So SBI makes a good buying entry at these levels.
Okay.
But bank which has already got an established trend is Kotak Bank right now. So Kotak Bank, I think one should consider with 1870 as support, and it's well making an attempt to give a breakout. So about 1950, this gives you a fresh target of around 2000 and higher. Sorry. So Kotak Bank looks quite promising from here.
Fair point. Okay, metals are losing further sheen. 2.5% lower for the metal index. Let's look at this one. Vaishali, clear stay away from metals right now, would you say?
Yes, actually, because we are not seeing any follow-up buying from what we saw on Friday. So I guess let's see, because market also is not giving clarity. And if market were to see some further corrective move, then of course metal too will get into correction. So, but I think downside is limited. So even in a worst scenario, I would say 22,800 could be retested. So those are the levels to watch and start buying from there on.
Okay, let's actually look at some of the big losers at this point. Vedanta down 3.9%, Steel Authority 3.6% lower, Tata Steel, JSPL, Nalco, NMDC, Hindalco, Jindal Stainless, all of them are upwards of 2% lower in trade. That's the kind of sharp fall that you're witnessing here. Along with this, even the realty pack is giving up its gains, 2% lower for this one. Pharma is also lower in trade. Vaishali, despite any kind, the move that we are seeing on the rupee, which aids the export-oriented sectors, the space is not garnering strength. I mean, Alchem Labs is 6% lower, Loris Labs, Ipca Labs, most of these diagnostic players are taking it on the chin today. What exactly are you looking at in this space right now? How are you reading into the sentiment?
Actually, I'm afraid to say that, it calls for a sell strategy. I mean, if you look at Sun
Okay.
Pharma, 1720 levels, if they break decisively, that could get, because it's right now on a 200-day moving average. So, if 1720 breaks, this could call for 1650 levels. So, the sector on the whole looks quite scary right now, bearish.
Bearish, okay. That's what the sell strategy could probably mean on pharma stocks. It is losing some strength at this point in time. Let's navigate through some of the other pockets then. Let's look at the mid-cap space. Any key winners here? Cummins we've already discussed. You have Page Industries that's up 1%. There was dividend news also. Suzlon, Mazagon Dock is holding up. You have solar industry, some renewable energy play probably coming in. Then you also have Nykaa in the new age tech space that's also buzzing, but large part has also slipped. Again, in the small cap basket, do we see anything interesting? So you have the telecom space, probably MTNL, Tata Tele. These are the two stocks that are probably buzzing. Beyond this, First Source Solutions is holding up 1% higher. PVR Inox, Titagarh Rail, Amber Enterprises within the EMS space. Some of these stocks are pulling up. Bata, again consumption theme. India Mart Intermesh. Very, very far and few between stocks that are up and about. But largely, most of these players within the small caps have also lost strength. I mean, look at Kane's Tech that slipped. You have Credit Access Grameen, Brigade, Piramal Enterprises, railway stocks are now down, CAMS is down today. A lot of pain that is being seen in the mid and the small caps basket particularly. Vaishali, anything within the broader markets that catches your attention, or either on the buy or the sell side?
So, well, as I said, Bank Nifty also is giving way. So, right now, once again, I would say Tata Motors could be a sell strategy, because we still have a big bias for that. Uh,
Okay.
and then, as I said, Sun Pharma.
Okay, got that. There is no stock in the green as far as the IT stocks are concerned now. I think all of them have slipped. Persistent, L&T Tech, Tech Mahindra Infosys, LTI Mindtree, Coforge. So large or mid caps both have slipped. No support from the rupee fall that we are seeing on the IT pack as well. What would you suggest here, Vaishali, IT?
So, Nifty IT, I would say, 40 to 500 at the sector was the support, and we are still holding on to that support. So if we break the index on the whole, if it goes below 42,500, then I guess it would get into further more selling. But till then, wait and watch.
Till then, wait and watch right now. 9:44. We'll start winding up the trade. Last word from you, Vaishali, for today. What would you suggest on the big trades on the markets? Now we are closing in on 23,400 now, 150 points lower. It's not looking good at all on the Nifty.
Yeah, so it's a weak bias. I would say stay cautious. Look for sales strategies.
Look for sell strategy on the benchmark indices right now, and very far and few between safe havens between the FMCG stocks that Vaishali has really talked about. But large part of the markets, even the pharma, is looking towards a sell side at this point in time. Weakness continues even in the broader markets right there. Vaishali, thank you so much for being with us in the morning edition. Not looking good for the markets. We'll see whether there is any sign of a pullback during the course of the day. That we really need at this point. Otherwise, there could be a lot of sell strategies in place, as Vaishali has pointed out. Market breadth has turned towards the negative. We only have 0.3% uptick on the FMCG stocks. Rest all of the sectors have slipped. Metals is the top loser, 2.6% lower. Pharma down 2%, realty down 2%, oil and gas down 1.5%. Small caps and mid caps now over 1% decline for these two sectors as well. Then let's look at consumer durables is down over 1%. Auto, IT, private banks, there is no solace at any place. India wicks up 5.7% at 14.4 odd levels at this point in time. F&O gainers, Cummins India, Britannia. You have just about these two stocks. Apart from this, Tata Consumer, Page Industries, L&T Finance as some of those winners. But on the declining side on the F&O space, you have Alchem Labs, Vedanta, Steel Authority, Delivery, Indus Towers, all of these stocks that are facing the brunt right now. We are closing in on 23,400. Let's see whether that gets breached on the downside, or do we see any bounce returning on the street right now. We'll wrap it up at that, viewers. Many thanks for being with us. But during the course of the day, we are going to be helping you with several strategies from top market experts who will continue to join in through the course of the day. And of course, we'll continue to get you all the earnings coverage as well. Stay tuned with us on Business Today Television to catch everything and all the momentum that you see on the market. Stay tuned.
Karnataka is the fourth largest automobile producing state in India, contributing 8.5% to the nation's vehicle production. The state also has the highest number of EV charging stations, boasting an impressive 5,765 public stations. We were the first to introduce an EV policy in 2017 and will soon unveil a clean mobility policy at our upcoming Global Investors Meet. Backed by our progressive policies, world-class infrastructure and a skilled workforce, Karnataka is paving the way for growth in both traditional and EV sectors. Join us at Invest Karnataka 2025 and be a driving force in the future of automotive and EV innovation.
You're watching Royal Ranthambore presents BT Golf. I'm Sakshi Batra, and with me somebody very special. Mr. Gaurav Suneja joins in. He's the cluster GM of ITC Hotel.